up? Wall Street had a very busy week. AI companies are making billion-dollar deals. Americans are starting to pull back on spending. Interest rates are doing their own thing. And somehow you're supposed to understand what any of that means before you check your bank account. Good news. That's why we're here. I'm Georgia Alfridas, and this is What's Next Wall Street.
That's right. When the headlines are big, the numbers are bigger, and occasionally someone makes a financial decision that makes us question all of humanity. I'm Dave Matthews, our resident tech guy, gadget guy, professional explainer of things that sound and probably are expensive.
Yes,
And
all
when we
true.
get to the actual Wall Street stuff, Greg Krause from Option Players is here to help us figure out what investors should actually be paying attention to. Because if the market is up, that doesn't really tell you quite enough.
That's right. So let's skip the financial jargon that I probably wouldn't understand anyway. Let's skip the Wall Street theater and get to the stories that can actually show up in your life, because this is What's Next Wall Street.
All right, let's get started with something that could tell us a lot about the American consumer. July retail sales fell 0.6%. It's the first decline in 9 months and the biggest drop in more than a year. Now, look, that's because everyone was on vacation. I just got back from Greece and I went to Monterey
You
Car
got back
Week.
from Greece and make you brag
Yeah,
much.
exactly, right? So, look, I wasn't going to retail stores. I was buying, important things like wine and cheese.
That's still retail.
Yeah, but European retail, that's why the numbers are down. I'm part of that problem.
Can I tell you something?
So,
Everybody's not going to Europe, sir. Some of us were right here going to Florida.
okay, all right, all right. Well, there are some caveats on this. Gas prices were lower, but you were doing some driving the kids to college, so that might have been like I was putting gas in the Porsche for Monterey Car Week. Oh,
That's valid.
Amazon did move Prime Day into June, not July. So some of those tax refund boosts that helped spending earlier in this year have faded. But the bigger picture is interesting. Consumers are still spending, but they're getting a little more selective.
That
And
part.
now, yeah, and now that we're about to get a reality check from the companies that actually have their hands on our wallets. Those are Walmart, Home Depot, Target, and Lowe's. They're all reporting earnings the week that we shoot this show. We're about to find out whether Americans are still happily swiping that credit card or if they're finally saying, you know what, we don't need that. But hey, back to school means spending money, right? What do you spend
Well, I
on that?
did. There was where I get my son's uniforms because he's got to have the name on there. There was like a 30% off. I waited for that. I waited for the 30% off because I know it's coming.
Wait, does he go
You
to a
private
school, a
school.
trade school where he learns like how to work on diesels? I want
No, but
that.
I he probably should.
I need
Uh
that.
yeah, exactly. But yeah, so I waited. I'm like, oh, swimwear. Like now he was wearing the tightest swimwear. They looked like Speedos because I was like,
That's
you know what?
European.
It's very European. I am kidding. But I just was like, hey, dude, you can wear that. I hope you don't get chafed, but you're just going to wear that because that stuff's going to go
Saved.
on sale in
Amazing.
September. And that's when I buy. I always try to shop like that. But the thing is, Dave, this matters way beyond retail stocks. Consumer spending makes up more than 2/3 of the US economy. So if shoppers start pulling back, Wall Street starts paying attention. So let's bring Greg Krause from optionsplayers.com in because I got questions for you, Greg. Let's see how I bring you in here. Let's see. Here you go. All right. So, Greg, what are you watching in these earnings reports? And is there a difference between a consumer who's still spending but trading down and a consumer who's actually tapped out?
All right. Well, yes. I don't know. Okay, so first, trading down just means you're buying what we would say like a Griffin good is. So a Griffin good is something like economy's not doing well, so you're not buying name brand stuff. You're buying a house brand. Kind of get what I'm saying? So
Absolutely.
yeah.
Sure.
So you brought up Walmart. So instead of buying Doritos, you're buying the great value like triangles or whatever. I don't know what they're called.
Got it.
Right.
Not the great
So
value triangles. I hope they don't. I hope they
I don't
don't
know what they
adopt
are.
that name.
I do like the great. So you have like cherry Coke, right? Let's just say a cherry Coke costs a fortune. Then you have whatever the great value cherry Coke is.
Yeah.
Like a 2 liters $1, right? So, like I have money, but when I'm having a barbecue or you're coming over for some crawfish, I'm not going to go buy a 2 liter bottle that costs $4 when this one right here tastes just as good and it's $1. You know,
Yeah.
Man, I was
That's your-
excited about coming over for
I know.
crawfish
You
until
say
I
you
found
don't
this
give
out.
us the good stuff. You
cheap
save the good
bastard.
stuff
well,
for
there's
yourself.
we're just going to put liquor in it, so does it really matter? Because you know,
Oh, there you go.
so,
And that Cajun sauce burns through everything.
yeah, you're not going to taste
Exactly.
anything. Most of y'all people that aren't from here are just going to be trying to drink milk to get it out of your mouth anyways. It's going to
That's
be
right.
too hot
That's
for you.
true.
All
That's
right.
true.
But yeah, the trading down versus you're tapped out, which means, you know, we ain't got nowhere to go to this. It's not the first time we've ever seen this. We see it quite often, about every 3 to 4 years. I don't think we're anywhere near tapped out. I think we're more on the trading down, but that also comes from, you know, you have government assistance that stops a lot of stuff. Seems to be some supply issues. You know, we talk about, you know, and it's not political. You got beef problems, right? Where beef is really hard and everybody's like, well, you know, Trump this or Trump. Well, people don't understand. We had a major drought for 4 years going back from like 2019 and on. And then, you know, as a farmer, you have to sell stuff to stay afloat. So you should keep a heifer for about 3 or 4 years before
What'd
it
you
starts
call
to
me?
reproduce. Yeah, you got it.
Oh,
You got to
no.
keep those heifers until they get about 1,000 pounds to sell them, and to get and you know it takes about 3 to 4 years to really start reproducing those and actually producing more meat. And because of that drought, people had to sell them to cover that. And then and everybody's like, well, now if you bring in the Mexican beef, maybe they'll help. Well, what that will do is make the farmers sell even more of their cows to catch up. You get what I'm saying? So it's a
And then we had the screw worm
there is
issue.
no winning of it, right? So you either help the farmers here by just having a short-term loss, more high price, or you screw them over by putting them out of business, and then a foreign farmer is going to control your meat prices forever. So, you know, there's no winning of it, and it doesn't matter. I don't think whoever was in charge is going to do the same thing. So, you know, whatever. You know, both sides are going to blame the other one. But
right.
we have supply issues on some of that. For example, like watermelon around here in Texas and Louisiana, for some reason, it just wasn't a good crop. And that goes with tomatoes too. You know, there's not a lot of them out there. So things change. It wasn't so much heat. I think it was a lot about the rain during it this time, but that's just in this area. So yes, you do have some issues on that, but let's just go the trading down. Like I said, people are going away from your name brand Doritos, PepsiCo, and stuff like that, and going more towards your house brand. We're just going to call it that. That would be your trading down. You might even see people, I don't know what they are, but let's just say you have the more expensive laundry detergent, right?
Mm-hmm.
You're going to buy the cheaper laundry detergent, which, by the way, is by the same company and the same thing, but whatever, right? You'll do that. And
Oh, what
then
I buy, Greg? I buy organic.
I don't know. My wife makes our own. I don't know what she does. She gets like 9 things together. And
Fight
puts it
Club?
together.
She's got Fight Club going in there?
Yeah.
Okay, we'll talk later. We'll discuss
But-
later because
Wow,
I
we
want
got-
some organic, homemade stuff. Okay,
But,
we'll talk
I
about that
don't-
later.
Yeah, so I don't really know which one of those is going to be it. But I think the biggest thing you got to look down is we are trading down more than that. I think one way to, like, if Walmart is doing pretty solid, right? And then you might see a little slowdown in Lowe's, in your Home Depots, and maybe even Target because, you know, they're not a huge house brand company, but Walmart's doing good. I think that's showing more of a trading down than just a tapped out because, you know, those people trying to get that cheaper deal are going to go to Walmart because they're likely got a better value than some of the other stores, right? Because they could do it in mass. So I think that's what we'll be looking for right there. I think it's really going to be on the end of guidance whether or not we have a problem. So I wouldn't go too much off the numbers and then look more in the back end of that discussion to see what at least they say the issue is. You probably saw a bunch of the tariff money going back to those companies this year or this quarter.
Yeah, is that really happening? I know people could file. There was up to like a May date where they had to get everything filed. Is the money really coming back?
Yeah. I mean, a lot of these, they have we've already seen it in the earnings already where some of these companies have gotten a lot of money. Like Apple's gotten back like $2 billion and all this, you know.
Whoa.
Yeah. So they actually have that money. Now, what are they going to do with it? They're going to keep it. They're not going to give it to you.
Yeah, they're
So
not
all
going to
these
give it
people
to
are,
us
"Yeah, you remember-
who paid
you
extra
are not
for
going
the,
to see
for the
a
phones
change in
and the
price. They're not going to lower their
laptops.
price. It's just money in those executives' pockets. right? So everybody's like, "Oh, I'll get my money back." You better go sue Apple because
Right.
because you ain't
Which some
never
people have
seeing
tried to
that
do.
money. Yeah, they're not going to get
Well,
through. It doesn't matter.
Okay.
You signed a contract saying I was going to pay this, this, and this, and it doesn't matter what the thing was because the tariff wasn't added on as a tax. It was a operating cost. So you can't say I entered a contract to not pay operating costs, because you do. Yeah, so I would just look at that. I think we'll see Walmart do, if it's just a little tapering down, Walmart will still be doing good, a growth on that. And Walmart is one of the fastest growing e-commerce companies out there also.
Still.
Yeah, I mean, Amazon's, I don't know, everybody uses Amazon, but I'm going more away from Amazon than in the past. And I don't know if this is everyone or it's just me because I live out kind of nowhere. If I order something on Amazon, or I ordered something that wasn't on Amazon, but it got shipped by Amazon, Amazon shipping is like snail mail. Like it can say I'm supposed to get it in 2 days. And if I order 5 things, 2 of them will be delayed for 5 days. I don't know what's going on.
But you'll
Amazon.
get Walmart quick. Are you getting?
Walmart
Are you
will
getting
get
the?
it- yeah,
are you
Walmart
getting
will get it close.
drones? Because we're getting drones in my neighborhood.
No, I ain't got drones out here, but yeah, I mean, I've actually used the drone thing when I was in Texas,
Okay, yeah.
at my grandma's house. But the we have a large Amazon facility here too. I just don't know why. I mean, like I said, they got to come from people here, drive all the way up there and get it. And I don't know if it's just a demand to drivers that causing the issue or what. But if it tells me Amazon's going to deliver it, I will look elsewhere. And there's been some things.
Wow.
I bought some stuff for my garden to kill some caterpillars. And I just got it like this week. I ordered that in April. And I even declined.
So you got a
it.
whole bunch of butterflies.
No, I mean, I went to Walmart.com and bought it. And it came like the next day, So, yeah, I think they're going to be doing much better. And then with their house brands, yeah, I think they're going to do okay. But like I said, you're also going to see that tariff money hitting back because Walmart definitely got a big pocket into that. Probably $1 billion or $2 billion. So the numbers might look good even there, but I would still look at what they're back in saying. And with all that said, it doesn't mean anything in the market. Like I always said, as long as people have jobs and government has given out jobs, there has to be a lot of sell pressure to make up for all the purchasing from your retirement accounts. That's it.
Got it.
mm.
Okay. All right, Greg, stick around because we are going to bug you later. I have some more questions for you. We got some more stuff to ask you. And so thanks, Greg, but stick around. Really quick, for those of you who are listening to the podcast, you have to watch it as well on YouTube because the whole time Greg was, not the whole time, we were listening, but Dave tries to move his little telly around so that you can see it. So I was like, oh, really? Let me move my little telly. And then he has, what is that? What's that telly from, by the way?
From Net Talk Live, our TV show that we used to
You
do
got
back in
one?
the day. Yeah.
This is from a different TV show that I did because I didn't get that one. But what's the other one for?
Well, that's an Emmy for Slingbox. So I had to put my Emmy out here. I just noticed that with this wide camera view, I had some extra real estate that wasn't being used. So I
So,
just thought my Telly and Emmy should be there in the corner.
so he tried to
Humble
show off
brag.
his telly. I grabbed mine. Then he tried to show off his Emmy. I don't have an Emmy. So I grabbed my hole-in-one ball. I
Oh,
got a
because Georgia.
hole-in-one.
Wow, that's impressive. That's at your local golf course.
Yes. So they
Well done, Georgia. Well
Now,
done.
I don't have it. I don't have with that, but I got a hole-in-one. All right. So anyway, all right. Let's talk about something that sounds like science fiction. Dave, you're going to get into this, but Wall Street is
Okay.
already putting real money behind it. NVIDIA is helping finance the AI infrastructure boom. Now, the company just agreed to guarantee up to $105 billion connected to an enormous OpenAI data center project in Ohio. Now, this facility could eventually have 8 gigawatts of capacity, with like the first 800 megawatts expected to come online in 2028. And NVIDIA is also putting $1.5 billion directly into the company developing the facility. Here's where this gets interesting, guys. NVIDIA makes the chips. OpenAI needs the chips. The data center needs the chips. And now NVIDIA is helping finance the infrastructure that will buy those chips. That's a pretty powerful business loop, Dave.
Yeah, business loop, circular economy, pump and dump. Well, it's not pump and dump. Look, a lot of this infrastructure that makes the internet work today It came about with fiber optics that were being run alongside railroads back in the 80s and 90s when fiber just came out. And did you know Sprint telephones? Do you remember when Sprint was a brand?
Yeah.
Sprint's been
Sprint's gone. Is
purchased.
Sprint gone?
It's gone now, but did you know Sprint is an acronym? Sprint stands for Southern Pacific Railroad Internal Network for Telecommunications,
Shut the front door.
SPRINT. And the reason why they were able to do Sprint as a telecom is because they had the right of way, meaning they had the land that went through every city and every community, and they could put fiber optic alongside their Southern Pacific Railroad train tracks. And that's why they had the first to fiber because they could do long hauls with it. And their advertisement back in the 90s and 2000s was pin drop. You could hear a pin
I
drop over the line,
remember that. I can't believe Sprint is gone. I had no idea. I don't even remember. Wow. I had
right?
no idea. Okay.
And they
Sorry.
they merged with Nextel. They did some,
My gosh, remember Nextel? It's
yeah,
gone.
the chirp, right?
Wow.
So anyway, a lot of infrastructure was built, and many optical companies went bankrupt. And then in 2000, when we were building the internet.com days, we raised 200 million for a little product that we
Yeah.
launched, the first Internet of Things device for computers. And that IoT world and that first computing, there was DVD.com, buy.com, all these sites where you could buy everything online. All of those, just like our beloved little startup, went bankrupt as well. But we paved the way for what's happening in the mid 2000s and the socials, the Zuckerbergs, the Facebook, the MySpace, that whole social era took off, right? And that was advertising dollars. And now one could say we might be in the same predicament where we're putting all these billions of dollars. And back then in 99, 2000, it was, we raised 200 million, which was a lot of money.
Holy cow.
Pets.com raised 800 million, right? So now we're putting in hundreds of billions of dollars. And what happens if people say like, look, my kid's graduating college, they don't have a job, I'm not using AI. We might see a boycott of AI, just like we're seeing in some communities, a boycott of AI data centers. So if you look at the past, you can see that a lot of skeletons were lost on the trail, the Oregon Trail, and also the Internet Oregon Trail as well. So it's going to be interesting to see what happens with this. Now, NVIDIA is literally printing money with the value of their stock price, so they can afford this. And Apple, their strategy is just build good hardware, and their AI has been slow to market, right? You have Siri, but Siri doesn't really have an AI component. She's just like good about doing basic stuff for you.
Mm, well, all right. Well, we'll see what happens. I don't know. I don't know. All right. This brings us to an obvious question, Dave. Are we, well, you pretty much answered it really. Are we financing the next $1 trillion technology revolution, or are we creating a very expensive circle where everybody makes money as long as AI keeps growing? You kind of answered that. But I want to bring Greg in because I want to ask Greg, when you see NVIDIA guaranteeing this much infrastructure spending, what is the biggest financial risk investors should be watching? And so I'm going to try to bring Greg in just to give us really quickly what you think about that.
I think you have to look at the bill because I do follow this one because it has to deal with, it goes with all of my SpaceX shares. But yeah, it's not 105 billion. Okay, it is 1.5 billion, and then over a very long time, right, to actually potentially even get to 105. It will never get to 105. Okay, let's just be honest with that. But NVIDIA has a problem. It has $80 billion in cash. It has really high margins. And what can you invest $80 billion in? You just can't just randomly go buy every company because the government's going to sue you every chance it gets. So what do? You do exactly what you were talking about. They're helping. This company is going to use that. NVIDIA is also a pretty large investor in SpaceX, because NVIDIA invested heavily into XAI. So when that got switched over to SpaceX, now they don't hold a large chunk, but they have some, just way like a lot. Google owns a lot, or Alphabet, I guess you could say. So it is, I would say they're the biggest risk itself. I would say it's not going to be very in until I don't think it's going to be a risk at all for NVIDIA's balance sheet. If there's an issue with this $105 billion, if they get it, it's not going to be because of this. It's going to be because like there's a big revolt against AI. But once again, that's a stupid thing. I get if your data centers doing things to hurt your environment, but to be against AI, what are you really doing, right? Your neighbor's just going to build it. And if you ban it in the United States, guess what? They're just going to build it in the country next to you. So you're not going to get anything out of there. So I wouldn't be worried about that too much. OpenAI, I don't know. Ask Dave. I think OpenAI is going to get destroyed in this area by other individuals. Everything they've.
But that's interesting. Yeah.
Okay. Yeah.
I
want to
think
know what
they're
you
really
think, Dave.
slow. They're just slow at getting everything out. Versus, let's just say their first 800 is going to be online in 2028. Let's take SpaceX for example, or XAI. What do you think XAI is going to build in those 2 years? I bet you it's 10 times that, right? And it was the same way when NVIDIA was talking about like all these little things that XAI came up. They put this thing together. They put all this stuff together and they thought it was going to take 3 years. They did it in 2 months and stuff. And that's not SpaceX or XAI saying it. This is NVIDIA saying that company is doing everything 10 times faster than everyone else because they're so efficient.
I'm with Greg on this.
But
yeah, what they announced
says this, that's a big thing to listen to,
Yeah, you can take a look at this. Go to x.ai and search for Grokbot. It's just announced a handful of days ago. It's a little always-on agent that uses the Grok AI, which is kind of a dick. It's a little asshole AI. He did, it's not the guardrails are down, if you will, but you can keep these little agents open that'll go do stuff for you. Like it'll look for competitive analysis from your competitors. It'll look, help you find a job if you need to get work. So it is pretty clever what they're doing. And then OpenAI, they have the lobbyists though, right? They have a lot of people that are trying to. I think of OpenAI like Uber.
But that's the problem. Is it's they're so much into the government that everyone that's got their hand in it is now some red tape to go X, Y, and Z. Why? Because where's OpenAI trying to make their stuff at? What state? Just tell me.
California.
Okay. Where is SpaceX doing theirs?
Well,
Texas,
let's see.
Austin.
Yeah, but their data centers
I can
aren't in
build
Texas.
a mall before you can move a trailer into California, right? And get it hooked up to it just red tape. And and then the efficiency of it. Also, SpaceX.
So SpaceX is in Memphis, which you have some ties in
well,
Memphis,
that's the
right?
current one, yes, right? So, and they're still got more to go there, but they're planning on
But how
building
can
more,
you have some ties to Memphis, right? Can you get anything
I'm
done
from
there?
Memphis.
Yeah.
Can what happen there?
Can you get anything done there? What's the political climate there?
Well, my father was the president of the local ironworker unit there. Of course, you can get anything you want done in Memphis. Is it corrupt? Probably. You know what I'm saying? But it is not a state that is going to fight you all the way. And then in the city, it's hard to say. It's one of those cities where you think it's going to be this, and it's just not it. If you're providing some jobs or whatnot, that's it. People in Memphis have more stuff to worry about than the AI center right there. I'm just saying.
Is that basically they concentrate on whether Elvis is still alive or dead? Is that what you're saying?
I don't think that's what they're worrying about. But yeah.
But the thing to look at for SpaceX is Elon wants to put data centers in space, and it makes sense because he can lift them up there. And he put his model, the Tesla up in space too, just as a test to see if his rocket could lift it. But look, space is a whole new environment where you have radiation coming from the sun. Like the NVIDIA chips won't work out of the box there.
Well,
so that's
I
a
get
whole
that. And
other
everybody's
deal.
all like cooling and stuff, right? Well, you already have the current ones up there that are being cooled, right, through that same type of radiation coolant. And it is if you ever look at one of their satellites, you'll see this spanning out and you'll see this long tail, right? And that tail that's coming out, the one that's not, I guess, in line, it's like the one by itself. That's its cooling fins. and it always faces the sun, so it's in the shade, by the way, just to let you know that. And that's how they cool it. And then everybody's like, well, they want to know how to cool it. This is my thing. I am not a rocket scientist, a space scientist. I understand finance, and I got all these degrees in that stuff and in ethics. But neither does anyone else unless they work for SpaceX. I'm not really listening to them. Why? Because you're someone on Reddit telling me you can't cool it down. And then some engineer that works for SpaceX that lands 200 and something rockets every year on a pad is telling me they can do it in this amount of time. I'm just going to
trust the engineer.
You know what I'm saying?
Exactly.
I'm just going to take their word for it.
Yeah.
Instead of someone that says, no, you can't do that. Now, it's another different story. Do I think it's going to be efficient as on the Earth? No. Of course, I think nuclear is the way to go. We see that with, was it Amazon that has a little micro nuclears powering one of their little systems or whatnot? I see that as a better way. But once again, I'm not an expert in this. I can follow money, and then I can also kind of go where people are thinking behavior issues. But AI demand is going to keep going up. There's no way. You can have some crazy people that are going to go against it, but the second you do that, it's going to go crazy. And to make it worse, if there is any type of war, okay, any type of war, AI is taking completely over immediately. That's for logistics, attacks, targeting. There's no
Well, that's
way
right. We've
anyone is
seen
going
that
to
with
use human right now. There might be a human
but
backstop, but they're going to make all the decisions via AI, and then a human's going to look at all those decision points and then choose which one it is.
Yeah,
I promise
Venezuela,
you
we
that.
saw that with using Claude for that, and Anthropic said, no, we're not part of the war machine. And then, like, oops, the US government did it again with the attack on Iran. But hey, there is a stock that's publicly traded. My buddy was one of the early investors in it. It's called Deep Fission, and they put a mile-long borehole in the earth and drop a little baby nuclear reactor inside of it. It's only at $8 at the time that we're recording the show. It IPO'd at a little bit like $9 or so. What's the IPO? Yeah, around $9. But take a look at oh no, 14, I guess, is when it came out of the chute. So
What's it
it's
called?
Deep Fission Inc. It's FISN. And maybe, Greg, we can do like an energy story in a later episode because I want to keep getting on with this show. I do want to use this opportunity to talk about another theme that's happening in artificial intelligence, and it doesn't have anything to do with a large data center. Those are, as we discussed, taxing the environment, and increasingly they're being paused by some communities. This interesting development is that powerful AI models are becoming downloadable software that you can run on computers you already own. Last week, Meta released Muse Glimmer. Who names this stuff? This is, some nerd. Yes, the answer is some nerd, Dave.
Of course.
It's a new open weight model, and open weight means that it's kind of open source of models. It's designed to handle reasoning, coding, and agentic tasks on consumer hardware. Meta says the model can operate on a laptop or a single GPU rather than requiring a rack of expensive accelerators. More importantly, Meta says it intends to release the weights for its more powerful Muse Spark model as well. So what that means is they're trying to build like a framework that others can leverage, and they get the kudos for doing so, but they might not get the money for it. But at the same time, China's Quinn project has been pushing aggressively in the same direction. The Quinn models are available in multiple sizes and increasingly efficient, what's called quantized versions. An official 4-bit MLX version, which runs on Macs really well, it only occupies about 5 gig for the model itself. So think about that. If you have a terabyte hard drive, normally your model would take up a large amount of that terabyte hard drive, but now it's only down to 5 gig for the model. And this matters enormously for Apple's M series computers. My business partner and I have been building Crystallize.ai, and that's KRYSTALIZE.ai. It's an application that runs on your Mac, and it uses Quinn, the Chinese model, but we've made sure it's safe for it's not going back to China. It's running on your machine. So everything's built in for a private and local agent that you can turn into your chief of staff. Now, the big surprise here for the industry and all this data center and what's called the foundation models that we were talking about earlier, those require $100,000 servers for their models. We can do this on a 32 gig or a 64 gig Mac. You might have one of those sitting right in front of you.
Wow. I mean, I don't, but yeah, I don't.
Our viewers
Uh,
do.
yeah, absolutely. Absolutely. Okay. So Dave and Greg, since we still have you up, the 30-year treasury yield, it's climbed to its, random, but not random. It's climbed to its highest level since 2007, like 5.3%. And I know, Greg, I know we're about to fight. Okay. Possibly. But it matters because treasury yields influence borrowing costs across the economy. Mortgages, corporate loans, credit, everything from buying a house to financing a business can feel the ripple effect. And here's the weird part, Greg, we're getting some softer economic data, which normally makes investors say, hey, maybe the Fed can ease up. But at the same time, long-term government borrowing costs are climbing. So you got this kind of tug of war between potentially slowing economy and a government that still has to borrow a lot of money. So Greg, you got to explain this to us, okay? Why? How?
All right,
Can
first
the
off,
Fed
groaning?
potentially be,
First-
but listen, how can the Fed potentially be moving toward lower rates while long-term treasury yields are
They're not.
moving higher?
They shouldn't. All right. So the higher rates are meant to slow down the economy in a way so inflation turns down. But then you have other issues that can cause inflation, and people say tariffs. But yes, but the same way, if your goods go overseas, then your inflation increases. So it's crazy. And I've said that for a long time that 3% is going to be our norm for a while. The only way it's going to pull back is if they really pull the rug and hurt the economy, okay? And I just don't see that happening, especially when it's just, okay, I'll put it like this. It won't happen until after the election, all right? Then they might try it, all right? And then they need at least a year to recover so they could try to get back. That's it, right? Because no one's going to pull that and hurt their power. It's just not going to happen. First off, 5% interest. I just want you to put it out there. You're going to loan me some money, okay? You're going to loan me $100,000. At the end of the year, I give you back that $100,000, and how much for letting me borrow it? How much? How much are you willing? How much can I borrow that money from you? And if you say, oh, it should be 1%, okay, then I want you to loan me $100,000, and then in a year, I'm going to give you 101 back. That's what you're doing at 1% at these low interest rates. And this isn't me loaning you. This is the federal government, which the federal government uses whose money? Our money.
Ours?
Our money,
So
yeah.
Ours.
We, or
The
at least the
taxpayers.
taxpayers of the United States, are fronting this money, and 99.9% of it goes to who? Banks. Okay? Stop, full stop. So you want me to loan a bank money at 1%. And I get you're like, well, I have to buy my house and it's cheap. Look, y'all always, I mean, not y'all, but all these young kids are always crying about Boomer or Gen X or the older millennials. Well, guess what? 5% was cheap when we wanted to buy a house, you know?
Ooh.
Right?
Imagine our parents. If our parents had gotten 5%,
It was
we would have gone to
5%
private
cheap
school
a
and belonged to
decade and a
country
half ago.
clubs.
So it's this whole thing where you gave something to someone to try to stimulate the economy or recover from, we did it during the 2008, and then it stayed there throughout Obama's whole term, basically as low. I think he raised it twice in the election year in 2016. Other than that, it never got touched, because that economy needed to go up. Then it got raised, and then we had COVID, so they dropped it, probably a lot of political pressure there that didn't really need to happen, because what did every company do when they forced it down? They just went out and sold bonds to just got free money from the government. Every last one of them spent like $20 billion. And like, here, I'll take all this. You're going to do it here. Buy my bonds for 1%. And the government was buying Apple bonds and stuff. It's just silly.
Corporate welfare is so fun.
I would look at it this way. If you are trying to make money or trying to guess where the 30-year or 10-year is going to go, or the 2-year and 10 is more important probably for most of us, okay? I would say you know what you're talking about, all right? And if you don't understand it, then you're never going to make any money off of it anyways. Buy your car, that you can afford. Buy the house you can afford. If rates go down, guess what the price of that house is going to do? It's going to go up. Okay? And
because more people can afford to buy it.
That's its average. Yeah, right. Demand will come back in. Now, this isn't every market. For example, if you live where Georgia lives, there's high demand in that part of the Dallas-Fort Worth area, right? I'm not going to dime out the exact city, but I'll give them a roundabout your country club that you've got that hole-in-one at, all right? So in that area, housing probably is maybe down from its very highs in 2022, but it's still expensive. Like you probably still got to win a lottery to get a house that's newly built there, right? So those houses have more demand, but the average house in the United States is not more expensive than it was in 2022, right? It's really basically came down a little bit because the demand's gone. So if you're like, oh, I'm just going to wait. Well, if you buy the house now, then the rates drop. Okay, you might have made it out. But if you just wait, it's not going to get any cheaper. You know,
you're not going to be able to afford it. You're not going to be able to
I mean,
afford
it's
a
going
house
to be about.
if you keep
It's still going to
waiting.
be the same price. And then cars and stuff. Okay, unless you got really great credit. Like I don't know. My kid was going to get. I had to buy him I bought him a new car. He's like 24 or whatnot, so he needed a cosign or whatnot. He just got out of college, so I was going there like, hey, what's your credit score? And I was like, hey, here you go. Boom, boom, boom. And they came back, and I was like, that's the best you can do? And I don't know what my credit score is, but it's high, right? So, and they were like, yeah. I was like, there's no way. And I was like, why is it so much? And they were like, because you're on it and he's on it. I'm like really?
Interesting.
Why didn't
And
you
wanna
just
know the
buy
sad
it? Why didn't you
thing
just put
is,
it in your name? Why didn't you just put it in your
It was
name?
with my bank, too. So I went through my bank, and I
Wow.
went through the finance company. But my bank was like, yeah, that's the best I can do. I was like, I can buy 30 of those cars right now with what I got in my checking account, and you ain't even looked at my savings. Like, what are you talking about? That's the best you're going to do. I was like, this is easy. Just give me the cash, right? I was going to write this
But
check.
he needs to build the credit, so you had to do it. that way.
Yeah, that's kind of what that's the bad thing, right? So I was like, we'll build your credit when we got something else, that gave a better. They wanted the credit, right? So I don't. If you're trying to build credit, by the way, cars are not the way to go. You want
Right.
credit history to have a longer period, right? So you want to buy that. You want to get that one credit card you just hold forever, right? That way, when it shows your credit length, average length, it's long. So you just keep that same credit card, student debt, housing, due. If you buy a car every 2 years, that gets put in there, gets dumped, and then you get a new one that shortens your credit history. It'll hurt. It's not going to hurt your credit, but you're never going to get that 850. You're going to.
Who does that here? We're Gen X. Okay,
Yeah,
I'm driving
whatever.
my car till the wheels fall off.
Yeah.
Let's keep this show going here.
All right. Yeah. So don't worry about that, man. It's don't worry about it. I wouldn't worry about it going down. I think it'll stay there, and then that softness in the market's just saying don't raise the rates right now. So that's the positive, is the rates won't go up, but it'll stay flat. So until we're booming, until everybody's looking for a new job, don't expect those rates to go down.
Thanks, Greg. Hey, there's a billionaire portfolio we need to travel here and take a look at, and that's Warren Buffett. Now, he retired in January at age 95. Do you believe that? Berkshire Hathaway, though, is still going strong and just made some interesting moves. The company increased its investment in Alphabet, bringing its position to nearly 106 million shares worth about 38 billion bucks at the end of June. And Berkshire also increased its bets on home builders, including Lennar, while making a new position in D.R. Horton Homes. It also sold out of Constellation Brands and cut some financial sector holdings. But here's the interesting part. Berkshire had spent years being a massive cash machine, but the second quarter it became a net buyer of stocks, purchasing 23.5 billion and selling only 3.7 billion. So the Warren Buffett era of the Berkshire Hathaway might be over, but they're still making some very deliberate bets. And apparently one of those bets is maybe people are going to need houses, I guess, huh?
And I'll tell you something about the houses that you named, Lennar and D.R.
D.R. Horton.
D.R.
Yeah.
Horton. those are houses that you might find in starter homes, starter neighborhoods. So they're not $1 billion. You know what I mean? Like if you find it in Frisco, it's going to be the outskirts of Frisco. So those are houses that maybe people can afford. And it's interesting because housing affordability is still a mess. So Greg, real quick, let me ask you, when you see Berkshire increasing exposure to both AI through Alphabet and housing through home builders, what does that tell you about where the smart money sees opportunity? And we got to get going here, so you got to make this quick.
All right. So first off, the Alphabet idea was actually Buffett's idea before he left. So that was actually him. All right. So let's just really, Buffett doesn't chase anything. The company never does. Everything they do is deliberate, and it's in advance. So they really look at a few things, very well-run companies, and none of these house builders or anything's going to be that. So I expect to be looking at it for scarcity, right? So AI infrastructure and how they can monetize that. They're putting money into Alphabet, who has their pockets into everything to help build that. That's it. Okay, let's just they got to have some type of, you got to have some money into AI somehow, right? Or you're just going to get left behind. They're just putting some of that into basically Alphabet and let's say it's happening. Now, on the housing side, it's a little bit different. They're buying land, and that's what they have been, and stocks. Actually, with their stocks, and you're saying they bought all that, for the last 3 or 4 years, they've been a net seller, nonstop, just selling. And just imagine a large person like that has just been a net seller forever, and the market's just going up 50 million%, right? So now they're a net purchaser. What's going on? All right. So why do they think? I think they're buying up land and then the infrastructure to build when that demand comes back. Kind of get what I'm saying? So like I said, they're very deliberate in everything they do. Everybody goes, well, he doesn't do this, or, why is it? It's always, it could be a year, it could be 2 or 3. They just sit on it. And then when it does hit, they're going to own all that land around Plano. They're going to own all that stuff outside. They're going to own it all. And you probably don't even know.
We're talking about the DFW airport for those of you who've never heard of the city of Plano or Frisco. Everybody's heard of Frisco because of the Dallas Cowboys, but I'm just saying. FYI.
So, the Frisco Cowboys that play in Arlington, that are called the Dallas Cowboys. All right.
It's
the headquarters. It's the DFW. It should be its own state, right? But I think that's really it to make it easy. Is they're not going to put them in treasuries even at 5%. It's better just to put them in that land and just let them sit there, and then they'll just be cash flow machines. In 5 to 10 years, they'll just start producing there when scarcity becomes an issue. And that's always been their approach in housing, is scarcity in areas. So when areas start building up or even have already built up, they just buy everything around it. It just is what it is. And they got billions, so they can do that, right?
Let's talk about George's favorite thing, gold, and the money sitting in your bank. The US dollar has been weakening, but gold is climbing and oil remains elevated because of the uncertainty surrounding the conflict involving the Strait of Hormuz and Iran. Gold was around 4,450 an ounce Monday morning, while oil was in the low 80s for West Texas Intermediate, and Bitcoin hovering around $63,000. Those hodl guys are probably crying in their Fruit Loops or whatever they eat in their mom's basement. So you've got investors looking at traditional stocks, bonds, commodities, and crypto while trying to figure out what happens next with inflation and interest rates.
Yeah, and I mean, the dollar matters more than most people realize. And I think, Greg, you might agree with this. A weaker dollar can make imported goods more expensive while also making U.S. products cheaper for buyers overseas. So this isn't just a Wall Street number. It can eventually, show up in the price of things you're buying. So, Greg, if inflation stays sticky while the dollar weakens and oil stays elevated, what assets become more interesting to investors? What should we
I think this is
investing in?
funny that you don't know this. I own 52%
Pokemon cards.
of a gold mining company. That's
What?
right. Someone needed some equipment, and I was like, I want to be part of Gold Rush too. I just made $6 million on Intel. Let me buy some equipment and buy a gold company. All right. So,
Wow. Is there anything you don't have a little piece in, Greg?
no, it's a bunch of old military friends and whatnot, and they had more assets than me, but they needed money, so I was like, well, whatever. I mean, I want to get in on this. And gold's been doing good, So, like you said, it's up above 4,400 right now. Yes, is gold really tied to the U.S. currency or any currency? Yeah, it's credit swaps is really what it's going to do. It's not going to affect most of us at our level of how we live here, but if your dollar becomes more valuable, you'll be able to buy more things overseas. You understand? So things in China will get cheaper, but this becomes a problem, right? Because if we're trying to produce more things in the United States, if our dollar is becoming more valuable, you get what I'm saying? Everything that we could import would be way cheaper. And vice versa. So that's how, companies or countries, not companies, they manipulate their currency to affect that trade. We don't really do that, or at least we don't do it out in the open. But in this sense, a stronger dollar, you're going to be able to buy more exported goods versus your internal. But then you want to, so it's a catch-22, right? You want to have a strong dollar, but if it gets too strong and you don't, I'll put it like this, you need a populace that cares about their country. I don't know if we have that on either side too much, because I'll say it, hey, whatever. I want you to go pull up a video right now of someone in a union. And then when that union boss isn't wearing anything made in the United States, he isn't driving a car made in the United States, he doesn't own one thing made in the United States, then him and his union could go jump off the bridge. Because what is he doing? He's not protecting his jobs. When in the 1990s and before, everything was made in the United States, right? It was a pride thing. You would spend a little bit more money for it now, or back then. Now, nobody cares. There's people out there
that will buy
things made in another country because it's not supporting the country they live in, but then complain that they don't get paid enough. That's what we live in now.
Okay, so listen, I don't think that it's intentional. I think we're talking about Walmart. You go to Walmart, not a lot of stuff in there is made in America. And I'm kind of on a natural kick, so I want all cotton. I want, I'm out here trying to buy my kids all cotton underwear, cotton undergarments. Like you got to stop using all this fake stuff. And it's really hard to find stuff made in America.
But
not only that, I'm intentional about it. It's expensive. It's so goddamn. It's not like $5 more. It's like $100 more.
It was your unions that did it. They were like, "Hey, we want our people to have jobs. This and this. Support your own jobs in America. Buy made in America." I have New Balances over here that cost me $260 and are ugly as shit, but they're made in the United States.
Everybody isn't rich like you, Greg.
I get it.
I got to wear the $100 New Balance
because they're uncomfortable. But
so listen, either you're a union
guy
over
here, the new dad shoes.
Yes.
But I mean, it is what it is. How do you force that? When you can, if you go to the grocery store and there are going to be tomatoes made in Mexico and there's going to be tomatoes made in the United States. If one costs 10 cents more and the other one costs that, everybody's going to grab the one that's cheaper instead of saying, "Oh, I should grab this one." And in the long run, it would probably benefit you to buy the ones made locally because that will help you. But people don't get that.
In your health. Yeah.
It's that we started becoming a microwave population. You want it right now. And it's just, if it doesn't affect you immediately, zero chance in today's day and age. It's the same way with us at option players. There's a lot of ways to invest. Options are quick. They're risky. And my biggest problem is everybody wants to bet $5,000 and make $1 million in like day two. I'm like, that's never happening. But that's what they want, right?
Right.
So it's the same way there.
Speaking of wanting things quick, let's try to wrap this up because it's for everybody. And you guys still got a screen ahead of you?
Yeah, so this is wait, what's happening? Georgia's recording to stop. Georgia, you're on the show again. This is 2 weeks in a row. We've lost Georgia. What's happening there? All right. We're going to bring it back to your wallet while Georgia figures out where here she comes back. The American consumer is now showing signs of fatigue. Hello, Georgia. Retail sales fell. Interest rates still making borrowing expensive. Gas is well above where it was before the conflict. I got to tell you, it normally takes $100 to fill up my 911 because it's a 19-gallon tank. It was like $120.
911.
That 85 911. It's so gorgeous.
It is crazy when the actual oil prices aren't that high. It's just the gas prices, right? Like
that's because
It costs
That's
you
because they're
$120 to fill up a car that small. It cost me $120 to fill up my SUV, but it has 3 rows. It's huge. I can go over 500 miles on that
yeah,
one tank of
I can
gas.
do 400 miles, but if I'm really leaning into it, if you know what I mean, wink, wink, it's only 330.
That's
Um,
crazy.
so, so regular people are asking, how much can I afford? And corporate America is asking, how much can we borrow to build the future? The
Mm,
tension is going to be one of those biggest financial stories to watch for the rest of the year.
yeah. So basically, your wallet is saying, let's slow down. And Wall Street is saying, full send. And somewhere in the middle is your 401k. Just, we're trying to figure it out just like you, and we're trying to give you the answers you want to hear, you want to see. So join us every single week on What's Next Wall Street. We post these episodes. We want to know what you want to know. Also, Greg, how can people get at you if they want to get at you? Where can they learn about your expertise? Because you're also an instructor at What's Next Wall Street. I mean, at Options Players. You're also an instructor at What's Next Wall
just go
Street.
to optionplayers.com right there. I would say you can email me, but that's about zero chance I'm ever going to answer that one.
Thanks for your honesty, sir. Thank you. Wow, that's great.
Well, you know what? You
I
can
mean,
email
it's-
Georgia and I.
it's today,
Georgia and I both monitor the same inbox, so one of us will get back to you. That's WNWshow@gmail.com. And
I hope we get
remember,
to
she's
see you
got.
next week, Greg. I mean, this picture is kind of, we did see Greg
That's
today,
me.
and he's got this new huge desk with this huge monitor. It's the size of my wall. Depending on my wall, if you're watching our show on YouTube, if you're listening on the podcast, you're gonna have to watch. But it was all dark in there, and so we couldn't see. But you kind of look like the picture of the sauce you got up here.
No, I don't know about that. That dude looks better than me.
Manic.
All right, so listen, we'll be back next week with more stocks, money, technology, and the business stories that could actually affect your life.
And hopefully fewer billion-dollar AI financing deals, because how many more of those do we need?
I mean, no
Yeah.
promises though.
All
No promises.
There's about
right.
500 billion in cash in AI companies out there just sitting there nowhere,
Jeez.
so they're going to be coming.
Oh my gosh.
All
All
right.
right, we'll see you
Well,
next week on What's Next Wall Street. What?
All right,
Dave?
bye-bye.
What?